I wish. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise. What's up, my future 1%ers? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, Prince of the Stock Market, and I'm here with the big homie, Kenny Coins. What up, man?
What up, man? Another week, another money, man. It just keep rolling up for us, man. It just keeps going up. I think they might just have to call us something else, man. This money's long. You know what I mean? Marathon long money week. You know what I mean?
You see our boys, our boys Keys up to $71.83.
Man, man, when I put Cam on this one, I'm telling you, man, the Keys technology, you understand, that's that 5G. They're the main manufacturer for Verizon, Sprint. So they're coming up with the new 5G technology. That's the thing you guys keep seeing on TV.
Yeah, I keep hearing about 5. Ever since we mentioned it, you know, yeah. I don't know if it just opened my eyes a little more or whatever, but I keep hearing about, 5G now. So.
Yeah, it hasn't came out yet, but it's on its way. So once it comes out and people start talking about the product reviews and what people think about it, you're probably going to see the stock start climbing up. And I personally think it's going to be more than $100. I think it has that kind of potential. JD is another big winner, 20%, huge.
JD.
So
I like JD, even though, I've been in since like $40, but I do like JD. I do like JD.
And the surprising one is Glue.
Glue still climbing.
Glue 18%. That one's a little surprising, you know what I mean? Because Glue is one of those companies that they didn't really have much going for them. Couple years ago, just for that Kim Kardashian, but somehow they're coming up. They might have something on their plate that is huge. I think that's gonna make a big difference soon. So let's hold on. Let's see what happens with Glue.
Yeah, my boys SGMS, they up at 24. Hold up, let me see where exactly they at. 24.49. Now here go the marathon money alert on SGMS. So I think when we were talking about it, they were about 19. I had my read on them originally was up to $25. Now it hit that on, I think, Thursday. This is what I would do, which I am doing. I will get rid of it here because you've already made something close to 30%. I'm seeing some resistance right here at 25. Plus everything is overbought, like super overbought. You might as well take some profit. Don't even play in this market right here. This market volatile. I will take the profit right here and look at trying to get in. Look at trying to get in again a little bit lower, somewhere closer to $20 a share. That's just me. But ain't nothing wrong with taking profit. But this is one that I really feel like $25, you're gonna hit some major resistance right here. But I could be wrong.
It could break right through it. Like I said, like we always say, it could stay overbought for a while.
Yeah, it could, but I would play it safe in this type of market right here, man. We said this year we doing something different. You know, we taking profit when we see it. So that's the Marathon Money red alert. Who else we got to talk about? Go, my bad. Go ahead.
TDOC.
TDOC.
We got to talk about TDOC.
I was gonna hit on the oldies.
TDOC is back up to $63. Like in the beginning of the year, which is only 3 weeks ago, it was $42.
Yeah.
That's a big change, man. That's 46%. 47 actually. When TDOC is climbing back up to the 80s, I personally think, to tell you guys the truth, I think TDOC fell because the market was falling. I don't think TDOC fell because there was any reason for it to fall. That just tells you right there is that I said this in a group chat, and a lot of people didn't agree with me when I said it. When things like this happen, government shutdowns happen, Trump saying outlandish things, you got to remember, these companies are not bad companies. They're falling because the market is falling. People are taking out the money. They're scared. These are opportunities to pick up a company like TDOC at $40 and 3 weeks later make a $23 profit on each share.
Exactly. And when
the
stocks fall like that for no reason, like, I mean, there's certain stocks that do fall for no reason, and we like to pick on, you know, the GameStops and Sears of the world. Yeah, those fall because they have bad
There's a
business
legitimate
model.
reason.
Right.
Yeah, that's a legitimate reason.
When
They're trash.
Yeah, when stuff just falls just because, hey, the market's falling, you know, and there's no real reason. That's the best time to buy stuff. That is the best time because they're gonna be right back up. They fell for no reason. No reason. They failed to give you a sale. That's why they fell.
You know what I mean? And you gotta understand, like, sometimes it's just a bad economy. You know, Disney was in 2008 at $19. Is Disney a bad business model?
Absolutely not. I wish oh my goodness. They were $19 in 2008?
It was somewhere close to that. Amazon was $5 in 2008. Was it a bad business model? To me, it's just like, you have to put some thought into this to how you want to make your money, because scared money don't make no money.
Scared money don't make money, man.
You know what I mean? And I said it in the group chat, and people didn't take it so well because, you know, when you're losing money, you don't want to hear nothing.
Right.
That's fact.
Right.
You know what I mean? That's fact. You know what I mean? You want to lose your money in peace. You don't want to hear somebody telling you. You don't want no
confrontation when you're losing money.
Get away from me. Stay away. Don't talk to me. Bro, you want to lose your money in peace, man. You don't want nobody to tell you, buy more. What? If you loved it at 26, you will love it even more at 19. Man, I'm telling you, man. It's, you know, but it's true, man. It's like some stocks, like when the market's falling, stocks do fall. It's just the way things are. I believe those are perfect opportunities to add extra 30-40% to your whole overall portfolio. You know, Square is another one.
Oh,
Square
man.
fell really hard, like ridiculously hard. And if I got it, like beginning of January, it was $50. January 4th, $50.71. That is a 53% 0.76 move.
Man, there was some other people in our group chat that said they were grabbing Square at the beginning of the year in that $50 range too.
Yeah, so there's tons of people that even left a comment in the Apple saying that they grabbed it at 50 in the beginning of the year. That's a big move. Square had no reason to fall. Square fell hard because the market was going down and it was a lot of uncertainty in the economy.
Well, it was. I have to say though, one thing about Square, it was hot. When it went up to like $103 or $102, wherever. Of
course,
that was like super overbought. I mean, that was like, and
I expect $80, but $50. That, you know what I mean? That's half the value right there.
Right? Yeah.
You know what I mean? That's a lot of money to be wiped out, but at the same time, it's like, you guys got to see that as an opportunity, because Square is coming up, man. So at least 4 to 5 places you go a day has at least a Square product in it nowadays.
It's a lot of competition in that space, though, that financial tech space,
And for Square to be as dominant as it is, for only being a 7-8-year-old company,
right?
You got to put that into perspective. You know what I mean? It's very a dominant company. It's not, it's not one of those companies that third or fourth in its industry. It's literally almost number one. So you got to see it that way. Don't let opportunity slip because you see something falling. You got to look more into it.
Right.
You know what I mean? So, Take-Two, it's doing all right. It's 5%.
It came down a little bit this week.
Yeah.
But they I don't know what's up with them, man. They real volatile. That's one that, when it gets up to somewhere around $110, you really have to look at taking a profit. I know it's kind of rough because I see them where they were at that $130 range, but they just can't get, every time they hit like that 110, 111 price point, they always come right back down. It's just like Tesla. Tesla, every time they get up to around between 260 and 280, 360 and 380, they come right back down to a little bit under 300 in the 290 area. It happens all the time. But I think Tesla gonna break through to that $400 range real soon. But man, they're just stuck in between around 360, 380, and 290. They're just stuck in that range. So if you could catch it like around right now, it's like 297, something like that. Once it goes back up, 340, 350, you want to look at, hey, when you need to have a plan to get up out of there, to exit.
I wanted to talk about something, Cam.
Go ahead.
The one that you put me on, Carvana.
I like Carvana, even though they took a slight little hit, but
we didn't put it on the list. But I think this is another industry changer, just for what they're doing. I had it for a while when Cam told me about it. I think at like $29. It's like at $40 now.
Right, yeah.
But I just wanted to bring it to everybody's attention. The symbol is CVNA. I think this is a great stock for what they're doing.
Real quick, I got a shout out. Man, I always forget the dude in our chat. It was like in April last year. He was in our chat and he said something about Carvana. He worked somewhere at a competitor. He was like, man, y'all need to look at this stock. At that time, it was like 22. That's when I bought it. I was like, yeah, I'll throw some money at it. I did some research. It looked good. And, man, that dude was absolutely correct. It like shot up from there all the way up to, I think, like in the 50s or 60s. But, it cooled down. But shout out to whoever that was in our chat, man. Good job.
Yeah, seriously, good job, man. I think this is another game changers. Like, you have to understand, like, every decade or so, there's gonna be like 1 or 2, 3 companies that are game changers. You know what I mean? That just started now. You know what I mean? These companies, like 20 years from now, you're probably gonna see them, 80, 90, maybe $100 a share. These are companies that are like Carvana is taking out the middleman. Pretty much you order your car online, and then if it's a brand new car, you got about like 12 days to return it if you don't like it. It's like, what? You know what I mean? That literally, like, because nowadays you drive your car off the lot, that's yours. You ain't coming back.
Yeah.
Nah, you drive that car off the lot, you ain't coming back. That period. Done. You know what I mean? But that opens a brand new door to what you call it, buyer's remorse.
And just how you buy cars in general. Like, a lot of people don't want to go through with the car salesman, man.
Sitting at the car dealership the whole day.
Yeah.
You know what I mean? The only thing I feel like the biggest con about this company is, which you can still do, but you don't get that experience of like driving a car and see what fits for you. If you're buying it online, you're really just taking a wild guess. It's like trying to buy brand new pants by a different designer you never really wore. So that's how I see it. But I guess this is where it's moving and it's working. They're making serious money.
Well, Carvana, man, I see the reason why. Like sometimes I look at companies, and I'll go back to TDOC, right? When you look at TDOC, sometimes I look at the market cap, but then I'm like, yo, who's gonna use this in the future? Like right now in the present, like my parents aren't gonna use this. I probably won't even be using this. But I bet you my kids are going to use it. I bet you your kids are going to use it. I bet you everybody's listeners, their kids are going to use it. And the same with Carvana. There's not a lot of people presently that's probably going to buy it. But I guarantee you this is the future of how people are going to buy cars. And if you think about stocks are forward looking. It's all about the future. If your future is bright, your stock is going to shine.
You know what I mean? And you understand, like, you only need like 500,000 customers to make your company. You don't need like 2-3 million customers to make your company.
You don't need like 3/4 of the United States to be
to make your company big. You know what I mean? You need about like 200,000 people, and you sell something at $50, you'll be a billionaire. It ain't gonna take you that long.
Yeah, you just need a good profit margin. That's all.
Yeah, that's it, really. You know what I mean? And I think Carvana got something without, spending all that extra space and all that manpower to get you one car. You know what I mean?
Because they have basically vending machines. So how they do it is they don't have like big car dealerships. They have like a little space and they build up. It's almost like apartments for cars. They build up instead of building, wide horizontally, and then you hit the button, the car come down. So it's crazy just even talking about it like that.
That's like futuristic, honestly, man. But I personally think Carvana's top. It's not really on our list. I feel like we should have put it on the list. When we was making the list, it was actually at $31. Now it's close to $40. So that's another big mover. That's like a 25% move, actually. Probably one of another profit takers. But I personally think
I see them a little hot right here
looking. Too. Yeah, you guys should really look into Carvana. I think that's really, really gonna be the future of doing things.
Man, I want to switch gears just a little bit. This is something I've been meaning to mention, but I always forget, man. So I'll hear some of these commercials on the radio and everything. It tells you about like, get your car here, 99 cent down, something like that. And then at the end of the commercial, you'll hear that dude come on and he'll just be like, right? He like talks real fast at the end.
Yeah.
And if you ever come across something like that is telling you this is a scam. Like if you hear that guy talking, 100%. If you hear the guy talking and you don't know what he's saying, you don't want to use that company.
I realized that when I was like 9. You know what I mean? When they hit you with that thing in the bottom and the words on the screen is barely readable, and you hear the guy talking real fast, I was like, so you spent literally 3 minutes on a commercial telling us about something, and that day you're gonna skim through the deadly part? It's just like the pharmaceutical. You know what I mean? The pharmaceutical stuff. This will help you. This. And then after that, you get to the bottom part. They spend 2 minutes telling you what it's going to do for me. And there's like 6 sentences at the bottom where he just literally talking as fast as possible. You know what I mean? It's like, what?
How can anybody even talk that fast, man? Like,
it's like, you know what I mean? It's crazy, but I used to thought that was funny.
Yeah, they come on there. All rights reserved. They're like, man, what the?
Hey, what do you think about Zillow?
Obviously, I like Zillow. That's one of my.
I feel like it's been stagnant for like a year.
It has, man. It came down on some rumors about Amazon getting into that same space, selling houses online.
Ooh.
And
I really hate Amazon.
It has.
Yeah, that's when you're gonna start hating Amazon. It's like, dude, Jeff, man, get out of my space, bro. Stick to books, man.
It hasn't really recovered from there. I do like it here at 30. I really liked it when it was in the high 20s. I had bought a little more. I didn't buy a lot more, but I bought a little bit more. But I'm cautious because of the Amazon stuff. I still like Zillow. Zillow technology as far as like searching for houses online, it's the same as like with cars. Nobody wants to go. People want to search for these things on their own time. They don't want to go get a realtor, drive around all day. It's like, man, I don't want to, I don't want to do that. I want to search for the stuff on my own time. That's what Zillow gives you.
The only time I'm willing to get a car with a realtor, she takes me to a really, really rich neighborhood, and I get to go inside of every single house. That's the only time I'll spend a day with a realtor, seeing some $1 billion houses, $1 million houses. That's the only time. But less than that, man, I'm swiping on my phone for a couple 100,000 houses, man. It's just
right.
I get 100%. I agree with you, man.
So the technology, I think, is always going to be there. Now, the company, I think Zillow's going to be there. I think the only person that can take them down is Amazon. I hope that if Amazon does get into
they just buy
Zillow. Yeah, I hope they just buy Zillow.
Just buy Zillow. You know what I mean? To me, I think Amazon. Here's the issue. It's not about Amazon doing what Zillow does better than them. My thing is that they're gonna get into that space where Zillow, you know how Zillow wanted to invest in houses and all that stuff.
Yeah.
And me and you think it's a bad idea. Amazon's probably gonna do that real well. You know what I mean? Because they're gonna have the capital and the funds to just buy that house outright.
Just buy everything. They just
what I
buy
mean?
A couple lives.
Just like Disney does. Just buy it outright. No debt, no nothing. You know what I mean? And I don't think Zillow's that big where they can do that for every single house.
Mm-hmm.
And I think Amazon is gonna go down that route to doing that. That's my personal opinion. I think Amazon is just touching everything.
I wouldn't be surprised that in like 2050, there's only like 10 real companies out there. You might have Amazon, Apple, Google.
It's just back in the. If you look back in the 1920s, 1930s, it's only really 10 or 15 companies.
Yeah.
If you really think about it, it's because the dynamic shift in the culture and the technology is why you have all these companies doing so well. No, I mean, there hasn't really been. Amazon is dominant, but there hasn't really been a dominant 10, 15 companies yet to take over. You know what I mean? GE still in the picture. A lot of old companies are still here. Apple's pretty old if you really think about it.
Well, they came in. I don't think Apple's that old. They came in the 80s. That's not that old. That's not old.
Microsoft came in the 80s. You know what I mean?
I mean, when we talk about old, I'm talking about like, the third when you had to walk down to the stock exchange. You know what I'm saying?
Yeah, I know. I get in the 80s. You still had to do the same thing, man.
Well, you could call up somebody and do it for you.
Yeah, you could call up somebody, but you still had to put some type of movement, a extreme amount of movement and effort to get it done too.
Yeah. I couldn't trade stocks back then, man.
Oh, nah.
I couldn't be paying like $100 commission fees, man. Like, come on, man.
Like, because like once you place the trade over the phone, you have to walk down and give the check. You know what I mean? That's the thing. It's like there is no, I'm gonna transfer you the money. Nah, bro. After you place the trade, you still gotta walk down there.
You could like Western Union it to them, but that's more fees. If you wanted to buy like Apple back then. Let's say Apple. I don't know how much Apple was back then. Let's say Apple was $10, and you spent
cheaper than that.
Let's say you spent $1,000 to buy Apple. You bought $1,000 worth of shares. Your
And then
your ending price would probably be almost double that after your fees and everything. So you have to pay the commission fee plus you pay a percentage. It's the flat commission fee plus a percentage of whatever you're buying, and then you got to wire them the money. You're gonna be paying the wire fee. Like it may not be double, but you're gonna be pay, it might be about $1,500 when it's all said and done.
That means that you're basically to turn a profit. You got to get the 1,500, and you have to get the 1,550,
right,
to turn a profit. You know what I mean? Back then, it was extremely difficult, man. It's like that's why a lot of people made a big deal. Like trading stocks was only for rich people,
right.
Which the truth is like at that instance, what Cam just said, it was, and nowadays it's a lot easier. I think Cam got a point. I think about 2020, 50, I think we're going to resort back to how the 1920s, 30s was. Not literally, but there's only going to be like 10, maybe 11 companies out there that's going to be worth anything to buy. Yes, there's still going to be like other companies out there that's going to be still to buy, but there's going to be only 10 companies that's going to dominate. You know what I mean?
Right,
Back in the day, GE dominated, Sears, Macy's, you know what I mean? All those big, huge companies, they dominated, you know?
The other companies, if you weren't buying the dominant companies, you were considered to be taking a huge risk. You know what I'm saying?
Oh, yeah. A monumental risk, man. You taking like Mount Everest type risk.
Like you just wiping your butt with dollar bills, basically. If you didn't, if you weren't buying AT&T and stuff
also,
like that.
back then, man, penny stocks was the no, that was more like the 1980s, 1970s, and 1990s. Penny stocks ruled the day. Boy, man, when I heard some of the old guys at work, they said, man, trading penny stocks, man, when you sell them, somebody buys $2,000 worth, you get like $600 commission off of that.
Yeah,
it's like what? It's like it's unbelievable, man. It's
just look at what you were saying, man. I already don't like to pay $1.50 commission on options. Like that makes me so mad that I got to pay $1.50 for options. Imagine having to pay $600 to spend $2,000. That just I couldn't do it, man. I don't know if it's because in hindsight, you know, right now is right now, you know what I'm saying? Because when I first started buying stocks when I was 18, I didn't have to pay a super commission like that, but it was pretty high, you know.
Yeah, you don't understand. Before this whole, like just a few years ago, you guys don't realize it was $15, $16 to make a trade. You don't understand that. Imagine
2009, 2010, yeah. Oh, it was like E-Trade. Them it was costing like $11.99, $12.99 commission fee.
It was expensive. And then think about 1980s, 1970s. You're talking about $100, $200, like to make a trade. Like,
if it was still like that, I would love my career would be a broker.
Yeah,
I would just be a broker.
Dude, that's basically what's the top careers back then. Like between the 1960s all the way up to 2008, bro, if you were a broker and you can survive the first 2 years, you was making money.
All you gotta do is get your own client, find you some clients that constantly buy.
Yeah. Know. Oh, yeah. You get about like 15, 20 clients that are like just traders. And maybe you get a company in there, you know what I mean? 1 or 2 companies, 1 or 2 small companies, and then you good.
Good.
You know what I mean? You was literally making so much money off of the commissions of the trades.
You don't even have to trade.
Yeah, you don't even have to trade yourself. You know what I mean? Because prime example, Bernie Madoff. That's how he got into his whole Ponzi scheme, because when the market started tanking in the 70s, he basically was telling people that, oh no, I took out your money and moved it, and then he was making more money on the commissions. That's how he got into his whole Ponzi scheme. That's how he got into it. You know what I mean? So that just tells you right there how much money he was making, and he didn't want to lose it, because if everybody left him, he ain't making no more money.
Right.
So,
marathon
money. But yeah, man, keep listening. I mean, I understand. I personally think 2019 is gonna be a good year for Marathon Money. A long time coming. I think we're gonna make at least 300% on this nice little picked out portfolio we got.
Yeah, and we're gonna be taking, like I said, man, at the beginning, we're gonna be smart about our profit taking, man. We're gonna be taking our profit when we see it.
Yeah, and I think that's something I feel like we neglected to like teach on this podcast, because the real truth is, man, if you want to be a real investor, real trader, you really got, and we talk about it all the time. Cam does, and I do. I'm taking at 25%. I'm taking profit. Cam says it all the time. He trade Fridays. That's his thing. Once I get to 20%, I'm taking profit. Gone.
Don't care what it do after that.
You know what I mean? After that, I think we should do the same thing here. You know what I mean? Set a limit. Put some criterias instead of just waiting to the end of the year. And because that's more realistic, you're going to take over more money. Yeah, we might leave some things on the table, but at the end of the day, we walking away with something. We ain't walking away empty-handed.
Right, and we walking away with a nice percentage. Where can you get? Let's take SGMS or let's take SGMS because they up 36%. I think since we first mentioned them. Where you gonna get 36% in less than a month? Where you gonna get that?
Yeah, we got set. I think it's time for us to start setting some criterias to when to take profit and then when to cut our losses. I think that'll create a better fundamental for the whole, you know what I mean, for you guys and us and this podcast. So that's the way I'm thinking. They ain't wrong with taking profit. Make that change. Yeah.
All right, man. You can follow me on anything, Twitter, whatever, StockTwits, Instagram at Camboni11, CAMBONI11. Hit us up on the Marathon Money chat. Yo, it was somebody who hit us up yesterday on the Marathon Money page. His name was Matt. What's up, Matt? Man, he asked us about the this new marijuana stock. So man, and he left some nice words, man. He said that, you know, he liked our dialogue, that it's natural on the podcast, and you know, that's what he like. It doesn't seem like it's scripted on here, and we don't. Sometimes, like today, hey, to be honest with you, we had nothing to talk about. We just come on this thing, man. We just start talking about money. You know what I'm saying?
You know what I mean?
We don't script nothing.
We don't. We are looking for sponsors. Anybody know some that can put our podcast on the map, try to take it further up.
Yeah.
That's our goal, definitely for this year. So that's one thing we're out there looking for. So if you want to reach out with some ideas that you would like to see for yourself, because sponsorship does come with like little perks, free perks that we can hand out to the audience. So
yeah. Yep.
So
where can they find you, Kenny?
Oh, KennyCon23. I had a few people add me on my Facebook page. I completely forgot about that page. I just went on there one day and I saw about like 300 followers on there. So I realized people are actually doing it. So I'm gonna be more active on there. But I appreciate you guys joining the message group. More people are listening to the podcast. So definitely appreciate you guys sounding like we're really helping y'all.
Yeah,
it's great to hear some of the feedbacks. You know what I mean? We're not trying to get too big headed, but this portfolio looking nice. They got that little splash on it. But you know what I mean? Like I said, man, me and Cam, we're very like picky on what we pick. We always buy low, sell high.
That's the name of the game.
You know what I mean? We never even try to think about selling high, buying high, selling low. We don't even think about that.
Nope.
But That's we need that money to be coming in. Long money. Need that.
All right, man. Till next week.
Peace.
Make that change today. Woo!